And welcome, Savannah. Thank you so much for tuning in to Real Estate Real Talk with Julia M. Spencer. You're listening to WRUULP, Savannah, Georgia, 107.5 FM, WRUU.org. We are Savannah Soundings Community Radio with Global Soul. Thank you again so much for inviting me into your living rooms, your car stereos, to listen to me to talk about a whole hour about real estate. That is what my show is all about, how to do anything and everything related to real estate, and specifically real estate investing. In today's show, I thought of something a little bit more special for us, a little bit something more different. I am actually going to be on the air later on this week as well, so I'm going to go ahead and just mention that on Sunday, from 1 to 2 p.m., I'm going to be sitting in for Sister Sound for Josephine, who's out of town, and I'm going to be playing all kinds of really cool music from the female performers that have inspired me over the last couple of decades, so make sure you tune into that. And, let's talk right about real estate. We had some really cool things happening this week. Want to update you a little bit about what's going on in Julia's real estate investing world here. Actually was able to go yesterday to South Carolina and purchase some tax liens over the counter in Jasper County, which was kind of interesting. But I'm going to get into that. If I have time for that at the end of the show, I'm going to talk a little bit about that. That's kind of like what's going on currently and momentarily. And but today's show, and bear with me because I'm here by myself today. This show, I wanted to talk a little bit about some of the last minute tax saving tips that you can kind of think about before the end of the year. We don't have that many more days left, obviously. But what I did in preparation of the show yesterday, I went and looked on the World Wide Web and tried to find as many possible places where I could go to get just some last-minute tax tips, things that you can do before the end of the year that will benefit you when you file your taxes next year. But you have to do them this year, obviously, so they apply to this tax year. And I went through so many websites yesterday, and there's so much confusing information. In fact, me being a real estate investor and having done this for so many years, I actually got confused about some of them. I'm like, I'm not going to talk about this on the radio because nobody's going to get this. I don't even get this. So I boiled it down to a couple of points, and I'm going to try to get to as many as I can on the show. And I'm going to give you a little bit of break between each one of those sections because I want to make sure that you have time to absorb them and kind of a little bit reflect on them and think about them, so I don't just feed you with a water hose here so you drown. But some of the things are actually quite useful, and some of the things that you might be able to apply if you own real estate, if you're a real estate investor, small-scale real estate investor like myself, or even if you just own a home. And some of these tax tips are actually quite useful. But before I get started with my very first point, I wanted to go ahead and play you a little bit of an announcement before I forget. And let's get right to that. Hopefully I can figure out the board here today. And I am back. This is Julia M. Spencer with Real Estate Real Talk, broadcasting live from the studio here near Troop Square in Savannah, Georgia. And happy Wednesday to everyone. The Wednesday before Thanksgiving. Yay! And in the studio with me, actually I'm here by myself, but I did mention I was by myself, but I did bring my kids because they're out of school. So they're sitting in the background watching Mommy broadcast her. This is kind of very interesting here. Always I have some entertainment here. But let's talk about some of the things that you can do to improve your tax situation for next year. Things that you need to do this year so that they apply for next year for your tax return, which you'll have to file on April 15th. Now, we all heard on the news that we have all kinds of tax reforms coming our way. And honestly, I haven't even sorted through all of that and made any kind of opinion up on it. The way I kind of approach these political changes when it comes to tax season is I kind of just observe it and read the news, and then I go and file my taxes in April and see what happens, and then we'll adjust from there. So I'm kind of like more of a doer. I'm not very much of a reader or investigator, even though I probably should be more, but I'm more of a hands-on person. So you very much have the real deal here in terms of real estate investing. So some of the things that you, though, still can do that will not make a difference, whatever our tax laws are going to be next year, are these. Let's start with the first one. The first thing that you can do to help yourself for tax season next year is basically, if you can afford it, make January's house payment in December and make sure that it applies to your loan in December if you have a mortgage. And now in my case, since I have several mortgages, and if you're a small scale real estate investor and you can afford it, of course, you know that not everybody can do that. The good thing would be to make your house payment for January in December. What happens in this case is that payment will actually be your 13th payment for the year for that particular mortgage, which means that, of course, part of your payment is always applied to your principal and the other part for your interest. And then there's going to be a payment, if you're in the state of Georgia, applied to an escrow account, which pays for your taxes and insurance and maybe some other fees like private mortgage insurance, that kind of thing. So you pretty much prepay a payment in January, so you essentially paid more interest than you should have had to. But when you get the statement from the mortgage company for your tax return, it will actually state that you paid 13 months worth of interest, which you can then deduct on your tax return, and that's going to give you a little bit of a tax savings. It's not very much. Now, in my case, I have several properties, several mortgages. It actually makes a big difference. So I always try to set a little bit of money aside every month throughout the year so that at the end of the year, I can make January's mortgage payment in December so I can get that savings. Now, this will actually not really give you more tax savings. You actually have to pay more, but for the first year that you do this, you'll get 13 payments in that year. Now, you kind of have to keep up with that, because if you follow this prepayment drill, you have to keep up with it, because, you know, obviously January is then applied for 2017, not 2018, which means then you have to kind of pay January of 2019's payment also in 2018. So you kind of have to keep it up. Otherwise, you screw yourself next year. So that's kind of like one of the tips that I wanted to mention. Another thing that you can do is prepay state and local taxes. Those are due, especially if they're due early next year, and then you can actually apply them to your federal tax return for 2017 if you paid them in 2017. So your total itemized deductions will be that much higher. Now, all these tips that I'm giving you, by the way, are for people that itemize their deductions. If you're one of those unfortunate ones that has to pay the alternative minimum tax, then that kind of doesn't apply to you all that much. So you kind of have to definitely always speak to a tax professional. And at this point, I want to say that I am not a tax professional. I'm just a real estate investor, and I do my own taxes. So if you have any doubts about anything that I say here on the air, or if you are a tax professional, of course, then in that case, I invite you wholeheartedly to contact me with some constructive criticism. I can be reached at realestate@juliamspencer.com. You can send me messages. You can find me on social media. I'm on Facebook, YouTube, all those places. Just type in my name, Julia M. Spencer. You can find me and send me messages. And also, if you are a tax professional, especially somebody who specializes in real estate investing, I'd love to bring you on the show. So please contact me. I look forward to hear from you. Now, again, like I said, if you are one of those victims that fall under the alternative minimum tax, simply what that means is that you won't be able to itemize your deductions. You just have to pay that alternative minimum tax for that year. And unfortunately, write-offs for state and local taxes are completely disallowed under the AMT rules. and so are also most of the other miscellaneous itemized deductions. So prepaying the expenses may do little or no tax savings for AMT victims. So again, make sure you ask your tax professional. And also, of course, this is an area where I likely see some big changes in our tax reform bill that was just passed for 2018 and beyond. I do believe that there was a section where the AMT tax would be eliminated. Again, we don't know how that all is going to play out, and I haven't examined it. So if you have any input on this, or you would like to talk about this on the air and you have followed it, feel free to contact me. And with that, we're going to go right into the next tip that I have for you on some of the savings that you can do and save yourself a little bit for tax season next year, with some of the things that you need to do this year before the end of 2017 to apply that to your tax return, which is due in April 15th. Now, by the way, I would say April 15th. I am one of those really bad procrastinators. I usually file my taxes in October 15th, which is kind of really bad for me because my birthday is on the 14th, so pretty much always around my birthday I'm in tax hell. So I'm always one of the ones that gets the 6-month extension to make sure that I do it right, and then I don't actually start it until the beginning of October, so it doesn't really help me any. So, but in any case, let's say that you are one of those great ones here, most Savannah listeners. I have faith in you that you file your taxes on time on April 15th. And here are some of the tips that you can follow before the end of this year to help yourself and get yourself some tax savings for next year. Now, let's get to one more point. Well, actually, you know what? Let me do something else first. I actually wanted to try something, and bear with me here. Like I said, on Sunday, I'll be hosting my first radio show that is predominantly music, which will be amazing. And I'm going to try to play some songs on my show this time so that I'll learn how to do it. And let's see if I can figure out how to do it here on my board. And I hope that I don't do it wrong. As always, my lovely computers are not playing too well for me today. But we have a couple people that are helping me here. So here we go. And I am back on. This is Real Estate Real Talk. Woo! Okay. This is Real Estate Real Talk with Julia M. Spencer. Thank you again for listening in. I am giving you some tax tips today so that you can go ahead and see if you can reduce your taxes a little bit for next year. And these are the things that you can do before the end of this year in order to make sure that your taxes are filed next year with a little bit of a reduction. But these are the things that you have to do this year in order to take advantage of that. And the next thing I wanted to talk about is about basically charitable giving. Now, there's a couple aspects to this, and these are the things that I usually do to reduce my tax bill greatly. Of course, you can go ahead and accumulate all your stuff that you want to donate and bring it to Goodwill or Salvation Army or something like that by the end of the year and get a receipt. And you actually can deduct the fair market value of everything that you donate. And this is something that I've been doing for many years on my personal tax return. But you can also do that for your business if you have real estate, and especially then. So what I usually do, I do this throughout the year, but now we're at the end of the year and you can still do this. Just if you have stuff that you wanted to donate, you really don't have time to do like a yard sale or anything, just go ahead and accumulate everything. And there's a really, really cool website that I always use. It's called itsdeductible.com. It's part of the TurboTax conglomerate, I guess. And it actually feeds into TurboTax if you use TurboTax. If you use Tax Professional, they'll know how to use it also. but it will have listings of just about any personal item, clothes, books, CDs, or anything else that you want to donate. And it will give you a fair market value basically for those items. And you can just enter it in, add it to your list. And then when you bring all these items to the donation place, they'll give you a receipt and they'll write a date on it. And then you can deduct that off your taxes. With each donation that you give, you can actually deduct up to $500 worth of items. And by the way, that accumulates very, very quickly. And you can get up to 10 of those $500 donations. So up to $5,000 of deductions off of just charitable giving. Now, I don't know about you out there, dear Savannah listeners, but as for me, if I look into my shed in the backyard, I can easily find tons and tons of stuff that I need to get rid of, especially as a real estate investor. We always have leftover building materials sometimes that we can do to the home donation stores here in this town that are the building donations. I think it's Habitat of Humanity. I think some of them have stores that specifically geared towards accepting donations from home improvement stores and things like that. So, you know, leftover tiles, maybe leftover other building supplies, anything that was left over from doing any kind of remodeling job. Those are all things that you can donate, and you can donate them at fair market value. And it would be basically, itsdeductible.com will tell you what the fair market value is. It's very easy to go on that website and just find those items and then just give them away. I mean, that's all I can say is give them away. And depending on what tax bracket you are, let's say you were able to make 10 donations throughout the year that are valued at $500 each for a total of $5,000. Let's imagine that you are in the, let's say, 30% tax brackets. Well, you know, in terms of cash savings, 30% of $5,000 is a pretty decent deduction, I would say. So at the end of the year, what I usually do is I go ahead and I try to find everything that's been laying around in my sheds, or, you know, just extra stuff that I don't need, and accumulate everything and make sure that I bring everything. I'll do this throughout the year, but especially before the end of the year. I bring those things to the donation places. Now, let me add a little twist to this. And this is a little bit of a funny tip. A long time ago, it must have been like maybe decades ago or so, I used to go to, I'm an auction girl. You know, I grew up with eBay, and I love going to real estate auctions. And I also did the storage shed auctions for a while. With my husband at the time, we had some great fun going to the storage shed auctions. Those are so much fun. You never know what you might get. So just in case you don't know what I'm talking about, let me give you a little bit of background here. So we would go to these auctions and we would bid. These are advertised in the legals in the newspaper, and we basically bid on unopened storage sheds. Sometimes they would be opened for us so we could look from the outside, of course, what's in there. And people didn't pay for their dues for the storage sheds. They would be auctioned off. And sometimes we were the only bidders. Sometimes there was a lot of competition. But in the end, you pay a couple $100 maybe, or even less, for the entire storage shed. And then you got to clear it out in a day or 2 days. And this is where my husband at the time really, really hated me, because he had to do all the hard and heavy lifting. But we found some really amazing things. But anyway, before I get too far down this line here, what we did is we... a lot of the stuff just kind of accumulated, and we got a lot of things that were quite useful things, but you just don't need, 3 and 10 coffee machines and 2 and 3 dressers and 7 couches, whatever. You just don't need that much stuff. So we would bring everything to the donation places and donate them at fair market value. Now, mind you, we paid maybe $100 for the entire storage shed, but we were able to deduct, of course, a lot more because the fair market value of these items was much higher. And now you have to be very careful and make sure, always, to discuss this with your tax professional, with your accountant, because you don't want to do anything illegal. I'm not advocating anything like that. So the fair market value of some of these items, of course, might be much lower than what you would pay in the store because they're used and older. So you want to make sure that you do it correctly the way the IRS tells you to do it. But I did promise you a little bit of a twist here. So after I kind of grew out of doing the storage shed auctions and got more into real estate, some of the things that have happened to me are that I ended up with real estate that I really couldn't use. So I had bought a couple of lots, and some of them even had structures on them, or improved real estate, that I really couldn't use for anything. They were not in a bad location, or my prime example, I bought the parking lot between the church and the two-story duplex. And the church firmly believed the parking lot was theirs, and they firmly believed that the duplex was theirs as well. But the way it was zoned, the parking lot was not theirs, and I got it at the tax auction for a couple of $1,000s. So what do you do with that? I mean, when you're stuck with a piece of land, you really can't use it. I can't use it. I mean, it's used by the church for parking on Sundays, and also you don't want to take stuff away from a church. At least I don't. What do you do with that? So what I did, and this is something that you can do as well, is if you end up with real estate purchased at maybe a tax sale foreclosure, which are some of the auctions that I go to these days, donate the land or the lot to a charitable organization and get a tax write-off. And a lot of times you can actually write off the fair market value of that property. Now, we're getting into a place here because the sidestepping the tax traps through donating real estate, that might seem like a simple proposition, but you have to plan this very, very carefully, and you have to navigate really sort of a minefield of tax traps. And some of the ones I want to touch on here briefly, but the rest of the ones you definitely, if you want to get into that, go ahead and talk to a tax professional. In my case, I just went ahead and donated the property to the church, the little parking lot, which they thought was theirs anyways, because they very much felt entitled to have it anyways. So I just let it go and quit claim deeded it to the church. And I was able to use the tax assessment value on the property card as my tax write-off. Now, this might not work for you. Now, if the property is worth more than $5,000, according to the IRS code, in this case it was not, so I didn't have to do much else other than that. But if it had been more than $5,000 that it was worth, you would have had to get some sort of substantiation for the value. And that means that you would have had to actually obtain some sort of appraisal, and also get that kind of certified and filed out with your tax return. And now we're getting into the place, if you have to order an appraisal, it's going to cost you money again. So if the property is worth a lot, appraisal of $500 or however much is charged is maybe not a big deal. In my case, the property was worth maybe $3,000, so I didn't really want to spend another $500 to just get it appraised. I just used the tax assessed value. And in that case, it was fine. But if the property is worth more than $5,000 and you want to donate it, make sure you substantiate it and get some sort of appraisal. Now, another tax mine trap, we have lots of those, that you might run into is that if the, let's say in my case, if the church had taken that piece of property and sold it within a short amount of time, on the fair market value, basically, and they would have gotten much less for it than what I had indicated on my tax return it was worth. Every time that a piece of property is sold, it has to be reported to the IRS, by the way, the sales price, and it's reported on the form 8282 or 8283, I can't remember, but you have to report to the IRS the sales price of the piece of real estate. So if this church would have sold this lot that I donated to them at fair market value, and it would have been a lot less than what I had indicated it was worth on my tax return, then possibly the IRS would have been able to come back to me and basically say that I overvalued the property when I made my deduction, and an adjustment is necessary. It's unlikely, especially if it's a couple years ago, but it does happen. So sometimes you definitely need to avoid those little traps, these little tax traps. But it is possible to very much use unused and unwanted real estate as a kind of like a tax shelter. And you can do this before the end of the year very easily. You can just draw up a sales contract, or you can file a quitclaim deed if you have an agreement of the person that wants the property, and just file a quitclaim deed, give the property to them, and have that recorded before the end of the year, before December 31st. So that's another really, really good tip of what to do with property and donating it to charity. And in fact, I actually have a couple of lots here sitting in the city of Savannah that I'm actually considering doing that with. Probably not this year, but they very much could apply for next year. So, yeah, I mean, definitely look at charitable donations. Oh, and another thing I was going to mention is if you plan on doing a charitable donation, you need to examine the charitable organization that you want to make the donation to. If you donate the property to an actual public charitable organization that's been recognized as a charitable organization, then you can deduct the fair market value of that property. But if you donate the property to a private organization that is not publicly recognized as a charitable organization, then you can only deduct the cost basis, which means what you actually paid for the property, which could still give you a deduction if you just want to get rid of it. If you just got a really cheap tax sale foreclosure and you just don't want it, you made a mistake and somebody else wants it, just donate it to somebody else and take at least a deduction what you paid. You're not going to make any money on this deal, but you're also not going to lose. So with that, I'm going to do a little bit of housekeeping because we're at the bottom of the hour, and you are listening to WRUU-LP, Savannah, Georgia, 107.5 FM, WRUU.org. We are Savannah Soundings Community Radio with Global Soul. And thank you for bearing with me on my music today. I'm going to play you one little PSA for just a second here. And that was Dan Kroll from Nowhere. It's one of my favorite songs. So I played that. And before that, actually, the previous song I played was Happy Hour by Weezer. We all need a happy hour, don't we? And you're listening to Real Estate Real Talk with Julia M. Spencer. You're listening to WRUU-LP, Savannah, Georgia, 107.5 FM. WRUU.org. We are Savannah Soundings Community Radio with Global Soul. Now, I wanted to go into a couple more points of things that you can do to help yourself in your tax return next year. And you got to do these things this year before you can actually apply them for your next year's tax return. But we are close to the end of the year, so I thought I'd make the show about that and make sure that you get those tax savings if you can. My next point that I wanted to make, and hopefully I can get through all of these and tell you a little bit about my South Carolina experience yesterday, is basically if you run a real estate business full-time or part-time, and mind you, if you have real estate that you're renting out and you're not living there yourself, you are in the real estate business. Maybe you're just in it part-time, but you're definitely in the real estate business. So most certainly you qualify for these deductions. And a lot of the things that you use in that business, partially anyways, are tax deductible. And that is the business use portion of your car, your phone, your equipment like your printers and supplies, paper, pens, video cameras, or most times people take videos now with phones these days. But back in the day when I started, I had all of that. I had video cameras, I had special cameras, I had, film that had to be developed. Yeah, I'm that old. So, and we basically used the business portion of all of these things to deduct off of our taxes. And even better yet, I was running my business from home, very obviously, even though I wasn't seeing any customers or guests or anything like that at my home at the time. I still was running my business from home. I had to have a dedicated place for my office, for my desk, for my chair, all of which, by the way, is tax deductible. The business portion of that, and even a square footage of your own home where you live is tax deductible as long as you use it for business use. So what I did at the time, I actually dedicated a special room in my house for business use only. And I set it up that way. I had my phones there. I had my computer screens and everything, and my papers and my files and everything. And that is where I basically conducted business. And I measured the room, and that's all I did in that room. I measured that room, and even the utilities for the house, that portion of the house, basically the way that works is, let's say you have a 1,500 square foot house, and the room that you're running your business out of is 1/5. Let's say is 1/5 of that 1,500 square feet. Then 1/5 of your utilities and 1/5 of your water and your trash and everything else that goes along with running that household is tax deductible as business use. So one thing that you can do to save yourself a little bit on taxes, and by the way, this applies for most other businesses as well that you run from home, you can go and start accumulating some of that information that you have, your bills that you've paid for phone, for the internet, for any equipment or furniture that you purchased in order to furnish that office. And you can accumulate all of that and add that to your tax return for next year and get yourself a deduction. Don't go blank without any of these deductions here. Make sure that you get all the deductions that you can if you while you still can get them. So that's a very good strategy. Now, another thing with this home office thing that I would recommend, or that I actually wanted to mention, is that let's say you have a maybe like a mother-in-law suite, or maybe a detached garage, and on top of the garage there's a room that you're using for the office, or just like a separate structure or something. And you decide to, put new carpeting into that office so you can have a comfy office, or you can want to paint the room. Now, everything that you're doing just to that room, any kind of improvements that you're doing just to that room, even if it's a room in your home, is 100% tax deductible if it's in that space that you're using for business use only. Now, you have to be very, very diligent in keeping track of all of that, keeping track of your numbers and your paperwork, your receipts, the dates, and everything else that you're trying to deduct. Make sure you keep track of that, because if it ever comes to an audit, you have that information handy. I used to have these folders. They were probably, if you go to like Office Depot right now and you grab the biggest binder that you can find, it's like 20 inches or something thick. I mean, it's very, very thick. That's the kind of binders that I would have for my tax returns, because I would just meticulously keep track of every single thing that I was doing for business. I was mortified of ever being audited, and I wanted to make sure that I have every little scrap of paper or anything that would prove the fact that I was using my business office in my home actually for business. And mind you, too, if you use that room that you designated as your home office for anything else, then you can't really deduct the full use of that room just for your business. So you have to be very careful and keep very good track. You can't have a bunch of toys laying around in your home office, basically. I mean, it's as far as you want to take it. You have to be diligent about doing it correctly, and don't take it over the top. Obviously, stuff gets lost in houses with kids. You know that as well as I do. So that is another tip that you definitely could use. And everybody does this. Most everything that, any of the expenses that we have are partially, anyways, tax deductible. So at the end of the year, start accumulating those papers. If you wanted to buy any extra equipment specifically for business use, now is the time to do it. And I'm talking specifically maybe about printers, supplies, stock up on your supplies. If you are planning to purchase new software like QuickBooks or any kind of software for tax purposes, like if you're purchasing TurboTax, to charge with that, those kinds of things, most definitely you should do before the end of the year so you can apply them to your tax return next year. So with that in mind, I have one more thing that I wanted to mention in terms of some of the things that you can do. And I will go ahead and accumulate that information here for you in just a second. And in the meantime, we will play you another song because I'm trying to practice, as you know. And thank you for listening to Real Estate Real Talk with Julia M. Spencer. Today's show, we're talking about some of the tax tips that I can give you before the end of the year that you can utilize to save yourself on your tax return next year. And I wanted to make one last point before the top of the hour. We're very close to the top of the hour here. One of the things that you can also consider if you're a real estate investor is to employ income shifting strategies. What does that mean? I mean, I read that yesterday. I actually had to read it several times, but people use very complicated terms these days to say very simple things. But the fact is, if you're a real estate investor, like myself, or if you just own a couple of pieces of real estate and it's not even your full-time job or anything like that, you're more than likely, if you have a family, are going to at some point employ your family members to help you do stuff. Now, they may do this willingly. A lot of times they do it unwillingly. Sometimes you have to force them or kind of manipulate them, dangle the carrot in front of them and make sure that they, there's something that they really want and they'll do something for you. In case of my kids, that's usually the case. And I get them to help me do stuff. And you can actually use your business to pay your kids or your spouse if you can find something to do for them in your real estate business. Now, in my case, it's very easy. We have a vacation rental business here. We have several houses that I have listed on all the social platforms out there, Airbnb, VRBO, and so on and so forth. And there's always things to do. I mean, there's literally always things to do. So either it'll be picking up or going shopping or buying supplies or just chatting with guests and giving information. I mean, there's always something to do. Now, why not pay your kids a little bit of a hourly wage or something for doing all these things for you? You can write that off on your taxes as an expense. Of course, your kids will register it on their side as income. And if it's not that much, if it's a small amount, it's not something that you need to worry about in terms of a big tax spectrum. But also, same goes with a spouse. I mean, there's no law saying that you can't employ a spouse or your children in your business, and you basically are shifting the income from your business to them. And your tax professional should definitely incorporate these strategies in your overall tax plan. And if your tax professional or CPA or accountant hasn't told you about these options yet, and maybe it's time to reevaluate your working relationship, so definitely ping them on that and ask them on that. And by the way, I wanted to mention this really quick. We have only a few minutes here, but a lot of times what I've found is whenever I've worked with tax professionals, they'll just go by the book. They go one line, next line, third line, fourth line, and they just basically go exactly by the book. They file your taxes correctly. Everything is done right. But they a lot of times don't have the creative mind that's behind giving you an actual input to how you should structure your life to benefit from tax savings that you could have had at the maximum. In other words, they don't think outside the box. I mean, that's really the best way to describe it. If you have a tax professional that doesn't think outside the box, then definitely think of maybe getting a different tax professional, or consider doing your own taxes every once in a while, because you'll learn a lot. So that is my very last tip. I am almost at the top of the hour. I want to do just a little bit of housekeeping here before I go off the air. We have some wonderful, amazing Christmas music coming on here next. And if you enjoy our programming on WRUULP, please support the station with a donation. As an individual, you can give any amount to become a basic station member or become a serious fan of the station. To check out membership rates and to donate to the station, go to www.wruu.org/individual and select to donate monthly or subscribe to an annual membership. Again, to donate to the station, go to www.wruu.org/individual and select to donate monthly or subscribe to an annual membership. Thank you for listening to and supporting WRUULP. And I am back for just a few more minutes. I want to just give you briefly some more information. I'll be actually on the air a couple extra times over this holiday season because I'm sitting in for a few other hosts that are out of town. Namely, Josephine. She is recording her first album in San Francisco, or I'm not even sure if it's the first one, but it's an amazing experience for her. So I'm sitting in for her show, Sister Sound. It's on Sundays from 1 to 2 p.m. We're going to be talking about impressive women that have inspired me in my life, and I'm going to be playing a lot of my own music from female performers that has just inspired me and made me the person that I am today. Just you should definitely, if you have the chance, to tune in at 1 p.m. on Sunday. It's going to be this Sunday, the 24th of December, and also on December 31st, New Year's Eve. And very, very last statement here. You are also invited to listen to my very extra special, amazing show from 2 to 5 p.m. on New Year's Eve, and it's going to be called The Correct Show. And if you let me just leave it at that. So there's going to be an advertisement coming up about that soon, but I will be basically having a guest host on the air with me, and we're going to be listening to and playing you all kinds of amazing music from the early 90s, late 80s. It's goth, industrial, all the really cool club classics from back in the day in the old German club disco times. I was reminded it's not a club, it's a disco. So tune in New Year's Eve. It's going to be from 2 to 5 p.m. It's going to be myself and Luke, and I look forward to hear from you through all my social media. realestate@juliamspencer.com. You are listening to WRUULP, Savannah, Georgia, 107.5 FM, WRUU.org. We are Savannah Soundings Community Radio with Global Soul, and here's some Christmas music for you.
For your free guide to real estate investing, visit juliamspencer.com.